One nation, one tax. A dream that India realized almost 14 years after the first time a government panel recommended a unified tax regime. This gong at the stroke of midnight, a special parliament session, ended the complex web of indirect taxes and gave India the goods and services tax, a unified tax regime that became the cornerstone of the Modi government. Thanks to the astute negotiating skills of the former Finance Minister Arun Jaitley, who spent countless hours allaying fears of states, assured them a 14% compensation for 5 years, and rolled out the tax with a hope of inclusion of fuel, electricity, and alcohol once the regime stabilizes. 3 years hence, GST has had many hits and misses. There's a significant expansion in tax base, with 1.23 crore active GST registrations as on March 31st, 2020 versus 65 lakh taxpayers who had migrated in the regime back in 2017. Rate rationalisation has been swift, with the number of items in the highest slab of 28% reduced to 37 versus 228. And introduction of e-way bill eased movement of goods and reduced the tax evasion. But on the other hand, there's a lot left to be achieved. The criticism of an imperfect GST became even more apparent, with dwindling collections which made further lowering of rates a big challenge. While the government was focused on reducing compliance burden, boosting IT infrastructure and further simplification, the COVID pandemic threw a spanner at works. The weak economic conditions only exacerbated the strained center-state relationships, with states threatening to take legal recourse to get the promised funds. In fact, cracks have started to develop in the GST Council that once used to pride itself for unanimous decisions. GST collections too have taken a knock, as the central government's GST collections dropped as much as 87% year-on-year in March.
3 years and 3 finance ministers later, many argue it's time for GST 2.0. Simpler tax with fewer rates. But that could be a tall order given that the centre needs to win back the states.